Good afternoon. Yes, I'm looking at Elliott waves today. I haven't done an Elliott wave video in probably over a year, and I was just for kicks and giggles, wanted to take a look at what's going on. We're gonna discuss, discuss the big picture, but we'll look at the subwaves first before getting there. Let's start with the trend line. There is this major trend line down here, and this is where I was projecting a $35,000 correction. Looking at the sub degree impulse on the first bit of Dogecoin, you got a five up. Then here's your second sub impulse and your third impulse. And then looking at corrections, your ABC, which is your 535 and another ABC. So ABC, and this is what I'm projecting right here on an ABC. So taking that off, looking at that subwave on a 535, we've just ended the fifth wave and we are headed up. Looking at forecast on that B wave at around $100,000. If you look at the actual fib retracement, which I should have somewhere around here. There it is right there. So at a fib retracement of the first wave at 6.18, we're looking at right at $100,000 for that fib retracement. And then the final wave down. So a 535, putting you around $30,000 to $35,000. This should happen around April. That's what I'm seeing on the other side. If I'm looking at uh, the actual credit reset of that 547 days. We apparently have around 218 days or 219 days remaining out of that. And we're still waiting for credit to drop like a rock. That credit reset always happens during Bitcoin resets. So I've done that in previous videos. You can check that out. But this is aligning exactly with that. And that should happen between now and April, even though I have this listed as September. So the structure could happen quicker than I have uh, the 535 structure built. So disregard that and the time zone I built on that. It's more or less just the structure of it that I'm concerned with. Okay, so going back up, let's see here. We're going to look at the big, so that we did the subwave, and that's more of the structure right there. That's the April one, but we'll leave. We'll just put that like that. So correction, forecast. Okay, so now we're going to go to the intermediate. So we have wave one, which is a five, wave two, which is an ABC of 535 down, another five wave up, which is wave three, and then back down into wave four. Now, this is the problem. Wave four cannot enter into wave one's territory unless it's a diagonal um, structure, and that's what this is. This is a leading diagonal structure headed up. So it's very, very simple. And that's one of the clues. So there you go. There's your leading diag. I just wrote that in there, but essentially it's the same thing. So let's look at the primary wave. So that's the intermediate wave. This is the intermediate wave here. So we're going to look at that primary wave. So your five wave intermediate wave structure is now over. That created wave one. So here is your wave one that just ended on your primary structure and now headed back down into a 535, bringing you back down to that $30,000 mark where that support trend line is, and then back up into the biggest impulsive wave. And we'll look at the fib retracement on that. So before we get there, here's the other fib retracement down. So your wave one and your wave two retraces down between 0.618 and 0.764, putting you at 30,000. And then this wave three headed back up. Once that happens, we'll put you around between 1.618 and 2.618. So I just put it in the middle, 2.236. Have no clue yet because we haven't gotten this wave yet. But if I was a gambling person, I would put it there. So, and do I have anything else? No, that's it. That is it. That is Elliott waves, and that is the forecast. Now, this is more like witchcraft. Take it with a grain of salt. This is not financial advice, but I just wanted to share with you what I was looking at to coincide with the other forecasting that I'm seeing. So most likely, bottom line, uh, price action on BTC should get to around 100,000 plus. Once we get to that 100,000 and we start to dip back down, that's when bad things happen. So if that credit crisis event that I keep talking about is going to happen, it will happen somewhere between here on this last leg on that C wave, and it will be very, very abrupt and very, very fast, just like here. So, and that will happen between now and we, like I said, a 219 or 218 days between now and April of next year. So that's something I'm sitting back waiting for because we always get a reset on credit when Bitcoin resets through its 547-day cycle. And just to show you that cycle so we can all be on the same page, let me come over here and look at the big, big, big picture. And this is um, the million dollar chart that nobody in the world is looking at. I'm looking at it because I built it. Um, just as soon as I figure out how to get, what did I do here? Oh, okay. There we go. Boom. All right. Don't need that. Don't need that. Let me take that off. Okay. Take that out. And now you can see it. All right. So here's your leading diag. One, two, three, four, five. And now you're back coming back down. And this is where that support line is. So I said 35 to 36,000 at some point, and then back up again, which is here in April of 2027. And then boom for that third wave. That third wave should take you to, what do I have on the third wave? 250,000, 240,000 on that third wave. So going back to, and this is a very, very long time, guys. This isn't like, oh, this is going to happen overnight. You're talking years. So 240,000. I have 184,000. So 240 would be further up the ladder here on this diag, this leading diag that I keep saying. Once again, 914 days on the expansion cycles and 547 days on the reset cycle. That's where we're at right now. Um, looking at credit, I'll just look at HYG. Every time you have a reset, this red line is a reset. Boom, credit resets, reset, credit resets, reset, has not reset yet. That's what we're waiting on. And of course, we walk through that chain of events that needs to happen in order for that to go forward, which is the euro uh, needs to come down, the dollar needs to gain strength, and HYG, J, and K need to come down, weakening credit, and then the OAS needs to spike. And when you see the OAS spike, then that is the confirmation. So taking HYG off out. So here's your spikes right here on OAS, and we are actually at the lowest point of 2007 right now, putting us in that cycle of a new trend coming back up. Here's 2007 back here, and this is where we're at right here. So, yeah, this is not good. And on top of that, we're overdue for some sort of major correction. As you can see, moving up on the stock RSI, clearly, just like here, so some sort of major move should be coming soon. It hasn't started yet, but that OAS will give confirmation with HYG and J&K for credit. Credit liquidity is what drives the ups and downs on BTC. It's as simple as that. So if I overlap BTC USD, and you can now clearly see what I'm talking about. So this would be your buy right here. HYG would collapse. This is OAS in blue that spikes, inversely affecting credit. So when OAS spikes, credit will dump. When credit dumps, there's no liquidity. And then once that happens, it starts coming down. That's when the feds move in and start their QE process over and over again. It happens every single time. Here's another one right here. Starts coming down, QE, and then spike. I don't think they did do QE here. They just stopped QT. No, yeah, they had QT going, but OAS started coming down, which is more favorable for credit liquidity conditions. So you had this chop deal going back up. So anyway, you can see the ebb and flows essentially of what I'm trying to talk about in this video. So today we learned a normal impulse is 53535, and wave 4 cannot overlap wave 1 unless it is a leading diag. And in this case, that's what we are witnessing right now on Elliott waves. Our giant BTC count does, and that's our major primary count right here, which should take us up to 240 to $250,000. Does have wave 4 entering into wave 1 territory, so it cannot be a standard. Oh, I'm sorry. BTC count does have wave 4 entering into wave 1 territory. So not my big count here, but the other count right here, that wave 4 right there. And that entire structure represents the first wave of an even larger BTC cycle. The possible interpretation is a leading diag. That's essentially where we're getting that. So Elliott structures are fractal, smaller 1, 2, 3, 4, 5 sequences, sits larger degree waves. If the 125,000 area completed that giant wave 1 right up here, 125,000, area completed that giant wave 1, you're now looking for primary wave 2. Wave 2 can be deep, about 50% to 78% are the zones we're watching right now. So that's where I'm getting these fib retracements right here on that second wave. So we have an A, 5 waves down, which has already been completed. Now we're headed up to that 100,000 at 0.618, and then some sort of major catastrophe right here to bring you down to wave C back down to 30,000 that I continue to talk about. Don't know what it's going to be, but you always get a credit reset during a BTC reset. That is the thesis. That's what I'm working under, based off of the repetitive uh, order of what Bitcoin cycles are doing. And I also challenge you: is this really a Bitcoin cycle, or is this more of a credit cycle, debt cycle? So that's really where I think this. Well, it has the halving. Okay, well, for the correction, okay, so A equals 5 down, B equals 3 up. That's where we're at right now in A, B, C. So 5 down, 3 up, and then an additional 5 down. The B wave rally can retrace a substantial portion of the A wave without invalidating the zigzag. The key invalidation is B exceeding the origin of A. So we're not going to go past 125,000 in my opinion. We are going to retrace in your typical 0.618 to 0.764, and then the dump. Uh, and that gives us a framework where the eventual C wave could potentially reach that $30,000 region, but that's a hypothesis at this point to confirm as the internal waves develop, not a prediction. So in other words, the euro will dump, the DXY will go through the roof, and credit will collapse. And then that's what will get you this. Now, what will happen to get there could be a bank failure. War and inflation are the nuisance behind all of this. That's not going to go away anytime soon. Iran doesn't want it to go away. They think they have more time than we do. We think we have more time than they do. Hence the manipulation with the yen at this point, because Japan's threatening to sell all of their bonds, which is about $1 trillion, in order to raise the yen. So we've decided to do it for them, so they don't sell our bonds. Simple as that, but things change, so we'll see. But right now, I think Bassett and the Treasury is going to get us up to about 100,000 before the collapse happens. I didn't actually give amounts in my previous videos because I was more focused on the why versus amounts and targets. So I wanted to put more of a target, and that's basically what Elliott's good for. Kind of a pie in the sky and say, well, this is where I think it's going based off of what previous waves have happened. Doesn't mean it has to. It's just something that you have to look at and say, this may happen. And trust me, I've read the Elliott Wave book like 15 times. The thing, you learn something new every time you pick up the Elliott Wave book. It's insane, and it will challenge you. But they wrote it in a way that's very very ambiguous in some sections to give the reader more of an interpretation, which sucks because Elliot didn't technically write the book. It was his buddies that wrote it, and I just don't think they were concise enough with that writing to make it usable in the real world for trading. I know some people do use it for trading based off of that, but you're basically gambling with fives and threes, and that's kind of the problem with all of this because you're dealing with fives and threes, and you can sit here and play the guessing game all day long. Well, this may be a five, this may be a three, I don't know. There you go. That's part of the problem. But you can try to get confirmation via the fib retracement. But I tend to I've gravitated away from Elliott waves for full disclosure because I think it's more wrong than right, in my opinion. Well, it's the person counting it. Well, it's not that. It what it is you're dealing with human emotions. And so dealing with fives and threes, you're always second guessing yourself. That's pretty much my problem with Elliott waves. But this looks like it fits, and I'm not even trying to make it fit for my thesis. It lines perfectly with it. Bless you, bless you. Anyway, if you got any questions, just put it down in the comments. I just wanted to give you kind of ramble on about my 2 cents on what I think Bitcoin's doing through the lens of Elliott waves. Once again, doesn't have to happen. I'm not putting much into this. I'm really looking at the euro and credit and what's happening based off of that because credit is the CEO of this game. It's not Bitcoin, it's credit. And the underlying factors of credit starts with the euro and the dollar, obviously. Dollar goes up, credit goes down. Dollar goes down, credit goes up. So everything's inversely working in this world. Same thing with the euro. Euro goes up, dollar goes down, credit goes up. And that's what's happening right now. So a lot of inverses, you got to learn it, but it'll keep you out of trouble looking at what's happening in the future. My game plan is not to jump in at this point. Y'all have fun with that 100,000. I'm going to have fun with that 30,000 ish, somewhere down there. That's when I intend to buy and ride that third wave to the moon. That's what I'm waiting for between now and April.